Good morning, good afternoon, good evening, whenever you are watching this weekly email, right? So, we're going to break this thing down. The month of August, y'all done got to see me twice in 1 week. On Monday, we sent you the monthly newsletter for August. Read it, read it, read it, right? Let us know what things are helpful. It does focus, and my message mainly focused on retirement and how to get in front of some stuff. But there's some other things in there besides retirement, and I pray that I wasn't so doom and gloom. I went back and looked at it and kind of was like, y'all, I had on a black shirt. I was feeling some kind of way. I had a lot of stuff on my mind after reading the audiobook or listening to the audiobook. There's a lot going on. We have moments like that. But this month, we are talking about all things business entity. Now. For those of you who are looking at these weekly emails and are like, Patrice, this don't apply to me. I'm just a regular W-2, or I'm retired and I'm loving what I'm doing. Cool. I get it. But if it doesn't apply to you and there's somebody in your circle you know that may need this information, I'm going to ask that you forward this to them so that this month they can be in a better solid position to know how to move in these tax and these internet streets when it comes to business entities. All right. So y'all know, former auditor here, I'm going to take y'all to the source. We're going directly to how the IRS sees stuff. We'll break stuff down with the states. I'm going to I'll use Maryland and Virginia because I'm in the DMV, and DC's OTR portal is a little bit harder to maneuver, right? But this can happen in any state. I do have clients that have businesses that are registered in Wyoming. I have some people that are in Chicago. So I've got clients that have businesses in other states, but I'm in Maryland. So I spend a lot of time on a Maryland Business Express website. So I'm going to use that as my foundational to just teach stuff. Doesn't mean it applies to every state. I'm going to use it as my foundational because I'm on it so much. But first, we're going to start with the IRS. So this month is going to be a lot of teaching. We'll go through what each of the structures are. We'll have we have some charts that we've created. We have some tools and resources that we've used. The tax book is one of my favorite resources that shows pros and cons of each entity. But I really want you to understand how they intersect, how they work, and what we're going to break down. So it's going to be more so like a mini podcast, educational. I'll keep it as tight as possible because I know y'all got stuff to do. And some of y'all like, girl, I told you this don't apply to me. So for my business owners, hey, for my non-business owners that are thinking about a business, hey, and for my non-business owners who are like, this don't apply to me, but I got a friend who I really want them to get this right. Thank you. All right, so let's go in real quick. High level. All right, so y'all are looking at the IRS breaking down the business entity structures. Okay, so this looks small to me. So it's at 175. I'm gonna just make it just a tad bigger because you know me and the progressives. Let's go there. Me and the progressives. Okay. All right, so let's talk about it. Business structures. This is the IRS website. I don't want y'all to be like Patrice lying because she not, right? IRS website. And we're going through it. Your form of business, your business entity structure makes a big difference when it comes to income tax returns. All right. So the most common forms of business that we see out in these streets are sole proprietorships, partnerships, and I just group them as corporations. It say corporation, meaning C corporation, Big Daddy corporation is what I call it, and an S corporation. I call them the main things, the most normal businesses are three, right? Sole props, partnerships, corporations. S corporations are an election, and we'll get into those details in the upcoming weeks as to really what the differences are. And then this is the thing I need y'all to understand. A limited liability company, an LLC, or an LLP even. Everybody is like, oh, because I got an LLC. Y'all, it's a business structure allowed by a state statute. Meaning you need to go to your state, make that election, but the IRS actually sees sole proprietors, partnerships, and corporations. The thing that is beautiful, and we'll get into this in more detail about LLCs, is that an LLC can be a sole prop, an LLC can be a partnership, an LLC can be an S Corp or a C Corp. What? The LLC is a chameleon, baby. That's what it is, right? You need to know the legal and tax considerations entered into selecting each one of these structures. And so I'm just going to stop right here because I don't want to go too hard, right? I don't want to go too hard in the paint, but I want y'all to understand we are talking about there are 3 primary business entities or business structures that the IRS sees: sole props, partnerships, corporations. They move a little bit different. How we tax them is a little bit different. And an LLC is a state business structure. It's a state, it's mandated by a state statute, not a legal statute at the federal level, right? So when you go, and even though you can go on a website and you can register your business and be an LLC, when you go to get your EIN, understand that the statute that is mandating that structure or that election is an LLC, is a state at each state. That's why I want to go in and I'm gonna show you like Maryland versus Virginia, and we might go over into Wyoming and look at that, just because I know there's a lot of talk about that. Okay, so we're gonna stop there this week. I'll break it down a lot more, right? I'll break it down and get funky with it a lot more in the next coming weeks. We'll click those links, but there's also something that was on there that says, for additional information, choose a business structure, go to the SBA, because SBA has a lot of good tools and resources there as well. So we're going to talk about, we're going to build down. Why? Because old school criteria, it comes from the law and builds down to the agencies, goes to for implementation and execution, and it'll go to each of the components of the agency. I just go old school from the top to the bottom. So we will go from, okay, IRS, that's who's taxing us. And I'm the tax cop, baby. So we're going to go IRS, then we're going to go and break this down. We'll probably go to their sister organization, SBA, to see how stuff is recognized. And then we'll go into the states to see how everything is built. And then we'll summarize everything at the end of the month. Picking your entity, beginning with the end in mind, right? 7 Habits of Highly Effective People is crucial, but it doesn't mean that you can't change. So I want y'all to understand that. It does not mean that you cannot change, but I want you to be well aware of what you're doing, what you're picking, why you're picking it, and what the tax implications are, so we can demystify this joint, right? Well, I got to do this and I got to pay. We're going to take this all apart. We're going to then present it all in a nice bow at the end of the month. And that's what we're doing. All right. So until next week, y'all have a good one. Peace.